Bruce, I've been thinking about why you didn't make it to Miami today. I can only speculate that it's because, as the recently elected chair of the Marylebone Cricket Club, you didn't want to get into a conversation about England and Australia and the Ashes. So we can maybe take that offline. Well, listen, I'm excited. I'm excited to be here with Bruce today talking about responding to a new era of risk. And Bruce, it seems like in the current environment, risk is what we're all talking about. So maybe let me just start by inviting you to perhaps share your view about what you see as some of the key systemic risks that are out there that we should all be thinking about.
Well, thank you, Andre, and I'm sorry I'm not in the room with you, but delighted to be joining you by other means, and I hope the connection stays good. I mean, it's clear we're all focused on the pandemic at the moment. The other two risks that I am preoccupied with at the moment of a systemic nature are climate and cyber, really. There are other risks out there that people speak to around space weather, for instance, but I think climate and cyber are the ones to rank alongside pandemic for the time being in terms of where our focus needs to be.
So maybe let's just jump right into the pandemic first. Curious, do you think that COVID-19 has really opened our eyes to the interconnected nature of risk?
Well, I think it has. I mean, I think our eyes should have been opened a while ago, you know, and a lot of this is really about human behaviors in terms of kind of what we can comprehend, how far we're willing to look out in terms of the issues that confront us. But, you know, the pandemic itself, of course, is not a new risk for the world. We had the Spanish flu almost exactly 100 years ago. And indeed, we've had frighteners from SARS and Ebola in more recent times. And indeed, Lloyd's has had on its website since 2008 an analysis of what a pandemic risk might do to an economy, which, if you reread it even 13 years on, looks incredibly prescient in terms of its impact. And so the challenge really is around prioritization, I think, of some of these more remote issues that are nevertheless hugely impactful as and when they hit. And certainly the scale of this pandemic just shows us what might happen in terms of impact were something similar to happen in the world of cyber or indeed the oncoming issue related to climate change.
Right. You know, one of the things that seems to have become quite apparent, both in the response to COVID-19, but also thinking about these other risks you're mentioning, climate change and cyber, is the extent to which there are a series of unintended consequences or other risks which present themselves. I think, for example, one that we're talking a lot about is supply chain risk as we see the challenges. And I'm sort of curious, as you think about the patterns over time, is this a newer trend that one risk leads to another, and there are a series of cascading impacts that business leaders now need to be concerned about?
I think there have always been second-order risks associated with things around the world, but clearly globalization has made us much more integrated. And if you look at stock market valuations, for instance, over a number of decades, they have celebrated top-line growth and bottom-line growth, extended supply chains, just-in-time delivery, actually in many cases high leverage on the balance sheet. And all of these things have improved economic returns, but they've reduced the resilience of a lot of the organizations that we either work in or who are in our own supply chains. And so thinking a little bit differently about these things has to be an important consequence of the pandemic. And I think it is all summed up in this issue of resilience. Are we resilient enough to manage our way through these crises? So far, so good in terms of the global economy around the pandemic. We obviously saw some seismic shocks, but governments intervened very heavily to protect their economies around the world. But it has to be a wake-up call for us in terms of whether we are focused on the right risks and putting the right resilience in place for the next one.
You know, that's very interesting. I think for a long time, as you said, businesses were concerned maybe around shareholder value creation, or let's take supply chain, for example, concerned with efficiency. And I think you've rightly pointed out, and we see this too at McKinsey, the increasing number of business leaders who are talking to us about resiliency rather than about efficiency, which is how do we have resilient supply chains rather than efficient supply chains. And I'm sort of curious, as you step back and think about giving advice to, say, business leaders, what do you think that this new environment means for business leaders and how they need to approach risk and where it needs to be on their agenda?
Well, I think risk has actually moved up the agenda for most businesses before the pandemic even arrived. But I think how we think about risk is an incredible challenge. And I think if I'm borrowing from Howard Kunreuter from the Wharton School, who talks about the Nimtoff issue of not in my time in office, and I think this is a bit of a challenge for all of us that work in the capitalist economy where returns need to come through very quickly, to think about the extended horizon. And of course, the climate issue is an even bigger issue in terms of the extended horizon than the pandemic has been. And so what happens is the urgent crowds out the important, we deal with the things in front of us. And because on the margin, if it's a 1 in 100 event, we might just get away with it over the next 5 years, we tend not to prioritize it as an issue that we need to address in our time in office. And it's incredibly difficult to change that, I think, which is why so many of these issues are behavioral.
So let me come back to one topic which I think was raised, or at least you made me think about it as it relates to systemic risk. It seems like in addition to everything you've been talking about, there's now this overview or overlay of geopolitical risk. The last panelists were discussing on the technology side, the sort of formation of a more American-led technology ecosystem and then a Chinese-led ecosystem. But that's against the backdrop of broader geopolitical shifts that we see, and we see it in the recent security deal between actually Australia, the United Kingdom, and the US. And I'm would love to get your perspective about what you see in terms of geopolitical risk and how institutions of all kinds can be thinking about that, because in many ways it seems very, very unpredictable.
Well, that clearly is a risk, and we see geopolitical risks that come out of things like climate change. If we create places in the world that are either too cold or too hot to live in, we'll see extraordinary migrations of people across boundaries, and we've already seen some of that coming out of the Middle Eastern countries, which is causing huge challenges for a number of the developed economies. So I think you're kind of right to point to that issue. I mean, my narrow example would be in the world of cyber, where we sell cyber insurance protection to customers, and about a third of all cyber insurance risks in the world today are insured at Lloyd's. We have a war exclusion, for instance, for paying out on those risks. Now, it'd be kind of interesting to test the definition of war, because I think most of us would say that there's been a war going on in state-sponsored cyber attacks for quite some time now, but of course nobody is formally declaring a war one against another in the way that they would do if we were engaged in this in the physical world.
So Bruce, you mentioned in some cases there are exclusions, and I want to talk a little bit about that, because the whole history of insurance is about essentially communities coming together. It's a mechanism to support people or businesses who otherwise wouldn't be able to bear the individual risk. And I think in the context of COVID, business disruption, war, as you mentioned, how is the insurance industry thinking about exclusions, and particularly thinking about it in terms of setting customer expectations? And I guess, in a way, the insurance industry is also managing against risks that it itself can't predict. So I'd love to hear a little bit about how you think about that balance between meeting this social function of helping individuals manage risk while also ensuring the things that you believe you can insure?
Well, so there are two parts to that conversation. The first, of course, is that not only does the capacity have to be available from the insurance industry, which means that it has to have a probability of earning a positive return on its capital, but it also has to be affordable for customers. And so the answer to most insurance problems is really not just putting the price up, but actually thinking about what risks we really need to insure if we're a customer, and where we're willing to pay a premium to buy that protection. And that's typically what happens in the conversation with customers about how they mitigate their own risks before buying insurance cover, but how the insurance industry also tries to think about excluding risks or including risks depending on a customer's demand for that coverage. And so we all know when we talk about fire in our homes that if you've installed a flood prevention system in your property or your factory, it's going to reduce the risk of the impact of a fire. Smoke alarms in private homes, flood prevention systems or flood systems in the case of fire in factories. And these have reduced the loss rates that have occurred in these properties, and as a result, insurance premiums can adjust downward and become more affordable for people. And we need to think about the same kinds of mitigation activities in things like the cyber world to protect against systemic attack in that space. And so the industry needs to help customers with modeling those risks. It needs to share the data that it has, and in many cases it has more data than any of its customers, because things like cyber risk get aggregated into the insurance market. So we see incidents all around the world, and we understand better than others perhaps what the right mitigations are, where mitigations have worked, where management can kind of intervene to reduce the risk of loss to their customers or their businesses. And all of this, I think, needs to be translated into richer conversations with customers about where to place their eggs, as it were, when they're buying risk protection.
Well, maybe that's actually a good jumping off point to talk about an issue which you mentioned before, but which is also very salient here in Florida, which is the whole issue of flood insurance, because I think it also implicates some issues around how the insurance industry can partner with government. So I think, as you may or may not know, a number of insurers have pulled out of the market for home insurance because of flood risk. In addition, the federal government is thinking through the National Flood Insurance Scheme, and there's obviously a whole conversation about the fact that the rates for that scheme no longer cover the risk. And it's therefore creating, as you would say, moral hazard, which is people feel that it's okay to continue to rebuild in places like Louisiana or the Outer Banks of North Carolina or parts of Florida, provided that they will receive some sort of insurance coverage. And so now we're entering a very tricky period of understanding who's going to cover this risk, what portion of the true risk should homeowners cover. And so I'm sort of interested in your perspective, Bruce, about what do you think are some of the dynamics here, and what do you think is the role of partnership between the industry and government to tackle some of these issues, where when you throw home ownership into the mix as well, you also have a series of deep emotional issues beyond the pure financial issues?
So again, I divide my comments into two halves, really. The first would be, again, around this issue of behaviors. So when the hurricanes went through Houston and Dallas in 2017, I went to Houston and I met a homeowner who had made a claim in 3 out of the last 4 years against the National Flood Insurance Program. And you have to ask yourself why he was allowed to rebuild his property in exactly the same place each time. And what we kind of also know is the most expensive real estate in the world tends to be on the coast, because that's where people want to live. And certainly in the United Kingdom, we let people build on floodplains, for instance. And all of that behaviorally seems rather stupid if we're trying to build in mitigation against flood. The second half of the comment is really in terms of partnership. So, you know, there are clearly risks that are too big just for the insurance industry alone to bear. And we already know that people don't buy insurance when it's available. So typically in the southeast of the United States, with respect to hurricane risks, only about 25% of the economic loss caused by hurricanes, which happen pretty frequently in the United States, so they're not an unexpected event, are covered by insurance. If you look at the pandemic, we look at this as a huge systemic event. The total available resources to the non-life insurance industry globally to pay all of their claims, not just pandemic claims, all of their claims, approximates to about $2 trillion US. And what we know from the IMF is that governments around the world injected more than $14 trillion into their economies in 2020 alone. And clearly the pandemic has extended all the way through 2021 as well. So we know this was too large a risk just for the insurance companies and the insurance industry to bear, and therefore it requires partnership between the industry and governments. And my argument when I talk to governments about these things, and we talk to a lot of governments about them, is actually if government doesn't partner with the private industry, it ends up owning all of the risk, because the citizens of most countries around the world look to their governments to protect them, and indeed that is of course what has happened through the pandemic. And so as we project forward and think about the next risks, whether it's cyber, whether it's climate change, I think governments would find the time invested in partnering with the insurance industry to be very profitable for them in terms of creating the right kinds of loss sharing between the industry and between government. And actually, there are some really quite good examples of this. You can think of the terrorism programs in the US and France, in the UK, where risk is shared between the industry and governments. And over time, a bigger and bigger first loss is built up by the industry that actually reduces the government's exposure to these kinds of risks. And the biggest challenge, of course, is that what we might end up doing is putting in place some kind of a shared risk management tool between governments and the industry for pandemic, but actually our next risk will be climate or cyber. And we're very good at fighting the last war, as we know, rather than the next war. And that, I think, is the challenge that needs to be put in front of governments. But there are all kinds of challenges in working together. Governments obviously believe that private enterprise is there to make a return, and therefore there's a risk that the government is not getting value in that partnership. And private enterprise is suspicious of the way government leans into these kinds of projects and makes them uneconomic. And so trying to get a relationship of trust between government and private enterprise is one of the big starting points that needs to be addressed in most of these conversations.
So, Bruce, one of the topics that's really at the forefront as we talk about the economic revival after the pandemic is the whole issue of talent. There are obviously a series of new dynamics around talent, including the ability for remote and hybrid work, the increasing clarity that there's kind of disproportionate contribution of certain talent to certain businesses. And it would be interesting to get your perspective on how the changing dynamics in the talent market are being felt in the insurance markets, and what are the ways that insurers are thinking about talent, and does this augur for us kind of a new era of thinking about the risks related to talent in a way that we haven't before?
Well, I think, frankly, it's an opportunity. It may be a risk if we manage it badly, but I think it's a huge opportunity. So the first thing to say, of course, that in common with most service industries, the insurance industry globally moved to remote working reasonably seamlessly, and actually probably better than most of us working in the industry thought that it would, and continued to underwrite policies for customers and pay claims to customers in a reasonably seamless way. But as this pandemic has gone on, as you're indicating, we're all being challenged now about what the right mix of remote versus in-office working should be. And that there's no doubt that the burden of the pandemic has fallen unequally on the population. And wealthier people with bigger gardens and better facilities at home have obviously had a better time of it than people living in multi-generational homes with too few rooms and with insufficient kind of Wi-Fi capacity, for instance. And you think about the young versus the old. People like me have very established networks that we can use remotely, and where people respond to us because we've known them for a long time. But younger people have not had the opportunity to build those networks. And so much of learning in the office place is by osmosis. It's watching what people around you do, how they behave. The ability just to ask somebody a quick question to get an answer to your problem, which is very difficult to do if you've got to engage them in a Zoom or Teams call as a formal matter. And so the whole issue for more experienced people sharing their knowledge with the next generation of talent, I think, is part of this challenge in thinking about how we make hybrid working well. work well. But of course, I've not heard anybody complain about missing their commute when they work from home. And so there have some real benefits to this. And I think the opportunity for us to engage with talent that is more widespread than just what's available in our physical location is a big opportunity. You think about how women have been disadvantaged in the workplace in many cases because they've had to take time out to do the childbearing and the child rearing in their families. Now men working remotely can help with that, but also women can work remotely and keep engaged in the workplace, as well as doing some of the child caring that were duties they had before. And so I think there's a real opportunity to make sure that talent that previously got forced out of the market for one way or another remains available in the marketplace.
Right.
And then I think you're also alluding to some of the broader ethnic issues, and we certainly suffer from some of that at Lloyd's. We are disproportionately pale and male in our market in the UK, and we've had a number of programs for a number of years to try to improve the presence of women, particularly in senior positions in the market, and we're trying to do the same thing for ethnic minorities as well. And that is not just an issue of fairness, but actually I think ultimately an issue of permission to trade, because we belong in other people's supply chains and they're increasingly demanding on us in terms of we manage our own affairs. But it's also an issue of making yourself available to all of the talent that's out there and not just a selected part of the talent pool if you really want to attract the brightest and the best.
So Bruce, maybe just a last question to wrap up. We're running out of time. Every industry is experiencing sweeping change: digitization, automation, the use of AI and machine learning, and all sorts of changes in business models. What are the one or two most exciting innovations happening in the insurance industry which you think offer the prospect of allowing the economy to better manage its risk?
So I think what we need to do is be better at innovating in the insurance industry, particularly in supportive services. We've always historically been very good at insuring physical assets, and we need to get after insuring services and digital assets. And one of my favorite developments in the market of the last few years is actually the availability of parametric insurance covers. So if you think about a flooding event, one of the challenges around a flooding event is historically been very difficult for the loss adjusters to get in to assess the loss, because the flood prevents people getting access to properties and businesses. And then, of course, all of those loss adjusters themselves are incredibly in demand because of the disaster that's occurred. And so you create a queue around these issues. And so once the flood recedes, you then have people coming in and adjusting the losses, and this creates delays in terms of paying people's claims. And we've developed parametric products around flooding, around frost, around drought at Lloyd's, which allow us to pay a claim when a certain trigger point happens. And it might be the height of a river, or it might be the number of days without rain, or the number of days of frost. And you can see how that immediately makes the product more relevant to the customer and more immediate to their needs, and allows us to get money into their hands much more quickly in order to rebuild their businesses and their lives post a disaster. So I think products like that will improve dramatically the confidence of customers in the insurance industry and the ability of the industry to respond in a really timely way when disaster strikes.
Bruce, thank you so much for taking the time. As the rest of our audience spends the rest of the season watching soccer and American football, you and I at least know we have the England versus Australia Ashes tour to be excited about. So best of luck with that, and thank you for joining us here today.